fresh trim, ready to sort some stuff out this week. But yeah, anyway, so a bit of a different video here. I want to look at the onlysignals Telegram group. We've discussed quite a lot about it in obviously the in the group so far, and you know, a lot of people were really interested in it in the start. It's something that I've joined obviously as it's free, and you'll see here that I'm actually part of quite a few groups in terms of like Telegram groups, and there's a number of reasons for that. I like to be able to see what other people are looking at. I like to be able to see what other people are looking at, mainly so that I can see, you know, maybe spot things that I haven't already seen, or maybe be alerted to a particular pair and stuff. But we're going to have a look at onlysignals at the moment, and I'll be completely honest, I would not recommend any of these groups, but it's really interesting to have a look at onlysignals as one of the examples. And he's managed to get like a couple of clean trades, and I do just want to say this, right? Like, FXAlexG is a lot better trader than myself. I've now been trading for just over 2 years, I think about 2.5 years. I'm in the middle of writing my playbook at the moment, which is like a trading plan, an ebook, which has like all of my, you know, all of the strategies in it. So it's usually a combination. It's a combination of a few. So it's trendline breakouts. I don't really do trendline channel trades. I prefer for the reversal patterns. So like, for example, I won't draw a trend line and I won't then trade off the trend line every time it taps it. It's just, I'm not a massive fan. I'm never really very good at getting the entries, especially with a tight R. And also like trading continuation patterns as well. So for example, if price makes a big move to the downside or to the upside, you then get a consolidation, you wait for the consolidation to break, and then you take your entry to be able to get into it. Also the occasional break and retest, but they generally tend to fit into kind of market structure, the market structure trading that I'm talking about anyway. So yeah, the reason I'm making this video, right, is because, as I say, I'm doing this ebook at the moment, and it's probably going to take me like maybe a year or two. And even as I'm doing the book, I'm discovering stuff when I go back to writing it. Like, you know, 2 weeks later, when I get some time to do another chapter, I made some tweaks and some adjustments and made some changes to it. And it's all about being able to get the most R for swing trades, and then also some day trade setups and other areas of added confluence to be able to make sure that you can actually get these trades and get the most out of them. The reason why I say FXAlexG is a better trader than myself is because his psychology is a lot better, you know, and we're going to kind of have a look at some of the stuff today. So we're going to have a look at Great British Pound NZD, which is the most recent one, and we're also going to have a look at AUD CAD as well, which has instantly hit a stop loss. I don't think AUD CAD is necessarily a bad trade due to the fact that it's at key level, but I just think that why the fuck have you traded it? And we'll get to that reason why. Now I want to talk about Great British Pound NZD first, because he said here trade was creating a very clean head and shoulders pattern, and we even came back up to create a double top at the area of interest. Great trade, just didn't end up playing in our direction. That's fucking bollocks, man. It's absolute bollocks. I'll tell you why. So Great British Pound NZD. Okay, so my chart's not massively clean. I have been trading this over the past few weeks. I did some trades on it a couple of weeks ago, which I think was here. And we'll kind of look at, well, actually, this is such a perfect example of a few head and shoulders, and also in terms of the reliability of them as well, and the placement of them. So we're going to have a look at the head and shoulders that he's called today, and also the area of interest. Now, this is an area of interest that I've had drawn out for quite some time. We can see reactions off here. You can see breaks. Here's the break, the retest, and prices then move down to tap you know, the recent range low, because obviously now this price is ranging, and also the price action is really nice off these pairs, off this pair. We're going to go down. We're going to go to the daily very quickly. Now, it's interesting because when we have a look at the daily, we can see the overall picture here. We can see that price is actually trending upwards. So if we were looking to short, we would be looking at a few different areas. One would be being here, and also the other would be the trend line liquidity. But this is why support and resistance trading, I think, you know, I do support and resistance trade, or I trade zones, but you've got to take other things into consideration, which is liquidity, so higher time frame liquidity, and also the overall momentum of the market as well. Because if you're just getting to an area and you're just entering a trade blindly, you're going to get stopped out, and phone's going off. And this is a prime example of why. Okay, so let's have a look at the market structure here for this trade. Now we can see that price has come up, it's tapped into the previous high, it can't break above it, it has tried numerous times. You'll be able to see here on the 1 hour and probably on the 15 minute a little bit more clearly. Yeah, see here, probably news or motivated maybe. I think I was news motivated actually. And we can kind of see here, right, that price is just kind of ranging. Now, we've seen that price has moved down. It's made a really big move down, and price 9 times out of 10, when you start making these moves and it kind of then gets to like a roadblock, you know, usually a key area, price is just not going to continue to move down. Price will always consolidate. And as much as people like to seem to think, apart from the ICT traders, I've got to give them credit for this, that price just seems to move horizontally and what market structure is just horizontal, it is quite frankly not the case. Okay, so we've got here a consolidation, and we can see here that this is not an uptrend. Okay, this is actually a consolidation, and in my opinion, the trade wasn't actually a bad trade. But the way that he's traded it and the confluences that he's looking at are fucking awful. Okay, so we can see here that we've got a very weak uptrend, and we've got this consolidation. Price has reacted off this area of interest or support and resistance. It's even I think demand zone from this order block here as well. We probably find a fucking fair value gap somewhere along the lines. You know, so whichever fucking way you want to look at it, you know, price has reacted off that and it's then gone short, but there is no reason to enter the trade because price is still consolidating. You know, price is still reacting off this trend line. Now, if you are going to take a continuation trade, which is one of the trades that I take, you do not enter during this period. This period here is you do not enter. Reason that you do not enter is because price is choppy, price is deciding what it's going to do next, and then price, if for example price then broke below this and then looked to retest it, so if price kind of like, we saw this break here and then came up and retested this, and it, you know, you could look for an area of confluence, then price will continue to move to the downside. But price is not able to do that. That's acting as an area of resistance. Okay. It's acting as a key level. That's the trade that you take here. You could even then look and argue that this is a key level, so if price broke off that, then you could then, you know, as long as price broke below it, you could then look to enter here, for example, and then you could be looking to either take out this area of liquidity, this area of liquidity here, or potentially even the trend line liquidity. There's your trade. Okay. There is absolutely no point of entering at this moment in time. And to also call this a head and shoulders is fucking abysmal. That is not head and shoulders. I'll show you what head and shoulders is. And I'm trying to make sure that I'm conscious of time. And we can still also see this as well. We've got this trend line, we've got this break. We didn't then break above this and retest this. We broke above this trend line. As I say, price doesn't always work horizontally. You know, you're not always going to get a support and resistance zone. Trend line liquidity and trend line support and resistance is a fucking huge thing. Okay. But yeah, so head and shoulders. Okay, with the head and shoulders, right? With the head and shoulders is a reversal pattern. We're going to draw it out very quickly, and then we're going to take a very, very quick look at head and shoulders itself. Head and shoulders is a reversal pattern, so when price has made a move to the upside, it then will create a lower high, and then a higher high, and then instead of then creating a lower high, where you would then get a continuation of the uptrend, you then create an equal high. Price will often then try, before it reverses, price will then try and create another high. Usually it fails, which is then where you get the shoulders appear. Here, you also get here, you get an entry at this area, and then price will often do, not always, I don't know how to, is price will then come back up, it will retest the neckline, and then it will make a move to the downside where it can take out various different areas of liquidity. So usually you'll have different areas of liquidity on the uptrend, which is where it's creating the lower high, and where it's creating the lower high, and then it will test that area, and it will either reject it and then it will move up, or it will then continue to move down, and then it could even break this area. It's just how market structure is formed, right? Higher time frames, lower time frames, whichever fucking time frame you look at. But head and shoulders is a reversal pattern. The same goes with an inverse head and shoulders, which works the other way. Okay, downtrend, then we're creating a higher low, lower low, then we get an equal low, then we get a lower high, and then the market structure shifts, and that is that's market structure shift. The ICT guys call it. It's an inverse head and shoulders. It's a trend line break. It's a support and resistance trade. I'm sure there's probably a fucking order block in there. As I say, you can probably find a fair value gap. But it's all just the same shit. It's market structure. But when you are looking for this pattern, which FXAlexG is supposedly a fucking master of, you are not, as I say, you are not getting it at the bottom of a downtrend, which is what we are looking at right here. This is just a consolidation. Okay, and I'm going to show you a back-tested or a live example. I'm going to use Great British Pound CAD as an example, because it's really, really good for its ranges, its price action and stuff like that. So, and by the way, like, this trade here is something that I've called live, or called in the group, in the Discord group. I've sent this out for free. The Discord is 100% free. There's absolutely no point in me making any money on it. But I sent this out, to you guys, and you can then, what you can see is you can also see an inverse head and shoulders. I basically traded off the trend line break, waited for the retest of the level, then got in with a really, really nice tight stop loss. It's also what I mean by FXAlexG as a better trader. Now, I left this trade here, which is take profit 1, but you can see that we've basically gone up throughout the whole range, and the turnaround's been roughly 2 weeks. Now, that is like, if you're risking 2%, you're making, or if you're risking 1% of, say, a funded account, a swing account, that's a 60 grand return on it. But I just do not have the mentality to be able to look at those kind of numbers, and not be eager to take profit, or stuff. And it's just something that I'm working on. I've only been trading for 3 years, for example. And that's why I say he's a better trader, because his psychology is better, and that's what it comes down to. But going back to what we were talking about with head and shoulders patterns, like, this is a prime example of a head and shoulders. I can actually give you another example of a bad head and shoulders. Okay, so we've got a really, really strong uptrend. Okay, price is then broken, still come down, and to be fair, we've just made a lower low. It's just broken the trend line. That doesn't mean that trend is going to stop. we've then made a head, but then what we have done is we've made an equal low. And we know here that this is kind of like, always see this is at the top of the range if we just look a little bit left. Price is really trying to keep pushing, but it's not able to do so. Price rejects it. We finally have a break of this level, and then we get this absolutely lovely fucking head and shoulders, and it completed its full cycle where it came down and tapped the bottom of the higher trend, of the uptrend. This is what I mean by also targeting different areas of liquidity. So this, this lower high here, you kind of always see reactions around that, and that's where you generally tend to set your take profit areas. That's where you tend to set your take profit areas. But when you then go on to we'll go back on to, and this is going to be the last bit of the video. Apologise, guys. I know this has been going on for 15 minutes now, but if you're going to trade market structure and you're going to label it as something and you're going to mislabel it and you're going to charge £200 a month for a signal service that doesn't work, and you're also then going to charge fucking £1,500 for a boot camp that is definitely going to lose people money, and you're going to go for all that fake marketing bollocks, then you need to be generally exposed a little bit. So we had a head and shoulders here, really really good head and shoulders here, massive head and shoulders, and I actually took this trade here, or here or something along those lines, and then price just would not get to the bottom. It finally consolidated. I was looking to target the trend line liquidity. I walked out with a small profit on this one, and then it just completely reversed. But that's an example of a bad head and shoulders. That should have been within that definitely should have been within the trend line and should have moved down, but then you can see this consolidation and it just moves to the upside. And it is what it is, but you then see a head and shoulders here, lovely trend, broken it, shoulder, right shoulder liquidity or left shoulder liquidity, move down, retest, continuation down to key area before it moves again. One example also of a continuation trade I'm just going to give you before we wrap this up. From what we'll be able to see, big move to the downside, trend, break of trend, continuation, is USD CHF. So yet again, another trade called live for 15R, and big move to the downside, consolidation. I'm at no point taking this trade whilst it is consolidating. There's no point. There's absolutely no point. You could get caught here. This is the only problem with trading patterns. Everything is always telling you something different. You could get caught here. You have to have a massive stop loss on it. You get stopped out, fine, really, in my opinion. If you get stopped out on that, it's not a bad thing. It is what it is. It's the price of doing business at the end of the day. But that what is going to most likely happen with this trade, because it fucking happens all the time. Big move down, consolidation, finally breaks this consolidation, and look what the fuck happens. Come down, and we've literally tapped that area today. Sorry, before we go, I'm going to give you one more example of this, because this was a fucking mammoth trade from USD JPY. Where was this? I called this trade. It was here, I think. Or was it here? Hang on. I have to go down to the hourly first. No, yeah, it was further down. I called it. I called that up here. Yeah, it was here. Okay. We've actually had a break of a higher time frame on the daily here. Higher time frame uptrend. Actually had a break, and you know that 9 times out of 10 it's going to retest that vertically or diagonally. It did. Called the trade here, called that short here, and look what's fucking happened. Called that short here. Go to the hourly. We know where the overall direction is because we've seen where the momentum switch is. And then I called it this one. Big move to the upside, big move to the downside, one more move here. And at the time, I think I got into the trade, or I didn't take it because I was just back testing, or live testing, sorry, head and shoulders pattern. But right, price is moving down, big move down, consolidation to the upside. Okay, two things can happen here. Okay, we can see this consolidation. We can see it's then created an area, a level that is struggling to break through. It broke the consolidation. We know where the trade is then. Do you know what I mean? We know which direction the market's gonna go. It's then gonna continue. Price could have done something completely different. Could have then broken above it, and then maybe tested this high here, or maybe even then continued up and tested the trend line again. But it didn't. You know, you've got two levels there. You've got this area here, this level here, this diagonal level, and then you've got this horizontal level, and you don't know which one it's going to take. The only way that you take is the way that it breaks. If it breaks one way, there's the breakout. If it breaks the other way, there's the breakout. You don't have bias until that trade takes place. And I think like 90 of these trades, man, they've been during consolidation periods. They've been when they're hitting like an area of interest. Yeah, for someone that traded 100 to 1 million, which has been disputed through various different methods, and for somebody that, you know, to do that you have to have an insanely high win rate, and for someone that's trying to sell you a service for $200 a month when the price action has been this fucking good for somebody who generally trades a lot of reversal patterns, like, nah, I'm not buying it, man. I'm not buying it, and you shouldn't either. Don't give them money. Like, if they're going to turn around to you and they're going to be hitting trades like 10 hours, 15 hours and stuff like that, then do it. But until then, just don't fucking bother. There's absolutely no point, man. Fueling that guy's fucking partying and, you know, driving around in Bugattis and shit like that and stuff with trades that are just fucking awful. Like, fair, you know, don't do it. Don't be a sucker into it, man. If you want me to look at any other trades and break down any other trades, I'm happy to, but it was just specifically Great British Pound NZD that really riled me up today, man. If you're going to tell people to spend money, you need to have some assurance. Like, if you're going to tell someone to spend money and that trade is, you know, that person is potentially risking, they're listening to you, they're risking £1,000, or even, you know, some people risking £5,000, dollars, whichever way you want to look at it, needs to be a fucking decent trade. From what I've seen recently, they're all fucking garbage, man, apart from USD CAD, and he is fucking lucky that he managed to get that one. Absolutely lucky that he managed to get that one, man. Wouldn't, you know, didn't enter here, he entered here. There was no indication at that point that it had broken this level. He was lucky that he didn't even get stopped out on that liquidity grab. So yeah, man, trade with caution. Do not buy, do not purchase the products, man. You know, got any questions, put them down in the comments.